Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're actually going to go over Solana in the beginning. Now guys, as this bull market is heating up, I may start adding some altcoins into our repertoire here. And if you can take a look at the SOL chart, you can see that we are in a pretty supportive area here where we did get that nice double bottom. We did end up pushing up and now are just hanging out a little bit in the middle of nowhere. But in general, we're finding support on the bottom of this channel here. And while some may claim that we are breaking out, as you can see by this diagonal, just taking this high to the next kind of high, you can see that we're breaking out. And sure enough, if we do just have a little bit of a pullback and bounce off my volatility pivot here at 141, then we could have a chance for a real breakout. Now, why do I say a real breakout? Guys, in my classes, I teach you how to find, support and resistance zones, and just based upon my personal theory, right, the kind of alpha theory of support and resistance, we aren't really fully broken out here, and this is actually where we would expect some type of rejection in this first place, which we did nicely get it. Now, this could have a shallow pullback if this market just continues to be bullish, but if it's just a little bit lackluster, for the first half of May here, then perhaps we could have a deeper pullback within this broadening wedge formation that is forming here. Now, a broadening wedge formation typically is a bullish formation. You do have a higher chance of breaking to the upside and retesting your highs, but it can be a wild ride, okay? It can be a wild ride, and you can see we actually did have one back here, and if I just loosely draw that, you can see that broadening wedge, and then what happened here is that we had a nice couple wave patterns. We had that kind of false breakout, sort of like what we're seeing right now, and then what happened, boom, all the way down, retesting our support, in fact, hitting lower than our previous lows. So if that's the kind of fractal that Solana's working on, don't be surprised, and this is not what I'm calling, but don't be surprised if we do end up losing that diagonal that most people are going to be using as their breakout level, and then coming down here and perhaps finding support on the 200 or 300-day EMAs somewhere around $100 to $120. That would be par for the course for Solana in its little fractals that it has with these broadening wedges. And then what might happen? Well, we just pop back up here, and then of course maybe we find some strength on my momentum pools, my volatility pivots somewhere around that 150 area. And then we try to conquer this bull zone somewhere around 168. If we are able to put price, action above 165 to 170, let's just say we kind of carve out that area and find support there, then we will have successfully taken the weekly volatility pivot, and that would give us a chance to take out the 2-week volatility pivot somewhere around that 190, 195 zone, right? And that puts us right at the top of our channel, where if we do flip that area, then perhaps that bull market in Solana just continues. Now, guys, that's my game plan for now. Of course, we might not get that deep retracement, right? That may be just too obvious based upon past fractals. Maybe we do just get a shallow retracement, and then we find support above my hold momentum level at that 151 here. And if we do that, there's a good chance that we're going to be just involved in this breakout sooner than this historical price action might suggest. Just to keep your eye out for that 140 area, right? If we do lose that, then of course that's also the 100-day EMA, and we can just understand that the next one down is probably going to be the 200-day EMA, which traders might be targeting. So again, that's your game plan for Solana. Let's just go ahead and jump over to Bitcoin. Guys, if we take a look at Bitcoin, we can see that we are just continuing to go along with my falling wedge pattern here. Nothing really out of the ordinary. In fact, when I drew this kind of wave structure here 2 weeks ago, right, I had no idea what this price action would look like. This was just a hypothesis. And so what I'm saying is that, after we found this low at this measured move that I had down to approximately 56, to $57,000, that we would hit that area. We hit that area and then we would recover the wedge. And if we were able to recover the wedge and kind of hold in this area, it doesn't matter really how high we pumped up to. Just of course, I have my diagonal here based upon that alpha support and resistance kind of zone theory. And we did hit that squarely, okay? So we did, in fact, just bullishly push up into this wedge, hit the other side, and now we're having that pullback that I predicted in the last episode. And that pullback, just could be anywhere in this area, perhaps retesting this big fair value gap that we have on this impulsive candle to the upside. My volatility pivot currently sits at around 61,000. As long as we're above 61,000, I do have a bullish bias on this chart. And then, of course, the bear zone comes into play should we fall under 58,450. Now, these things wiggle around, depending on how price action is behaving. So if these levels change, well, that's normal because the price is also changing. What doesn't change is, of course, these support and resistance areas that I have in the background in gray. So those are kind of like your stable levels to be taking a look at. And then, of course, these are the momentum-based levels, which change based upon how a price is actually behaving. Now, based upon this current behavior of actually overshooting my mark and then getting a nice reaction off of that zone here, I would suggest that we could easily, fall down to maybe 62,000, again, 61,000. Nothing would be broken if we did that. This would look perfectly bullish. If we had a wick down or some type of flash action down to that $57,000, as long as we held that area inside of this wedge, then I really just would not care whatsoever. Prefer not to do that. It's a little bit weak for a price action to come back to a price that it was already at. I would prefer actually to have a shallow pullback and just keep attacking these highs. If we keep attacking these highs, right, attack, 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 and then attack it again, sooner or later you end up breaking through. And the level that we're looking to hold, just to hold this momentum to the upside, is that 63,165. As long as we hold above there and kind of our chopping around, it doesn't really matter what we do in the next move. As long as we find our way back in that area, back in this diagonal zone and flip it, then we're going to be looking to take out this candle that we just formed back here. And so the strength of the move is really going to be coming in, if we're able to close some candles above that $66,780 level. Now, the more that we chop around here, the lower that these levels get based upon momentum. And so that just makes it easier for us to actually capture that bull zone. So going sideways is not too terrible. It makes people a little bit bearish, a little bit afraid of what the market will be doing. But in reality, it's also resetting these bull zones, which means that, of course, continuation just becomes that much more likely as long as you're able to hold your lows, right? That bull zone currently sits around 69,900, right there in between the 2-week and the weekly volatility pivots. So again, if we take out 68,000 to 70,000, put some price action just in this, this kind of support zone up here, then that's going to be looking pretty good for continuation, guys. I wouldn't necessarily even have to wait to take out these highs. I would be saying as long as we have price action, above that, let's just call it $69,000-$70,000 area. Even multiple 4-hour candles would do it for me. I would think that we're probably going to impulse to the upside. Now, on these breakouts, sometimes we do have pullbacks and rechecks of the wedges. So just understand that there could also be just a lot of chop in this area. It might take us into the middle of May, and that's just perfectly normal. Don't want you to be too freaked out here if we do have a pullback. Just remember this wedge. And of course, if we're pumping, just remember we could also butt our heads on some of these things up here as we try to break out for real. Guys, I think I'm going to leave it there. One thing that I did want to mention perhaps is if we take a look at SOL versus Bitcoin, okay, this might give us an idea of what's going on with our alts more than perhaps ETH and Bitcoin. And what you can see here is that, if we were just going to take a look for some type of breakout structure, you can see that, we are, in fact, getting this kind of, if we just create a little bit of a zone here, you can see that we are getting a breakout on SOL versus BTC here on the daily. And, I consider this to be fairly bullish for SOL in the sense that, it may behave a little bit stronger than Bitcoin. As long as we can hold this diagonal, SOL may behave stronger than Bitcoin. So if there is a pullback, I don't know, maybe SOL is the one to be in. And also, if Bitcoin goes, then maybe your altcoins are going to go pretty hard, at least the ones that run with Solana. So yeah, I mean, we'll be looking for some type of continuation out of this. Of course, a little pullback, no problem. But yeah, if we get this nice little run here, perhaps back up to these highs, then your alts could go with that. Guys, that's going to be your alpha for the day. Stay safe and happy trading.